Hello, everybody. Hope everybody's doing well. So, I am on vacation, so I'm doing kind of shorter videos today, but I think I still can add some value by talking about some of my favorite stocks right now. And this video is titled "Stocks that not only grow at 50%, but have also grown faster despite the terrible, terrible, terrible macro backdrop that we've had in December, that we've had in October, November, the past three quarters, and some of these quarters were also for September. But anyways, these stocks have been growing very, very, very fast, and I would argue that the tough times, or at least businesses have been experiencing a tough time. I would argue for at the very least 6 months. At the very least, it started like late June is kind of when this started. And so these quarters, these Q3s incorporate the current market madness. I just want to point that out. Layoffs have already started. Recessions are a lagging indicator. Everybody now in the classic media outlets, everybody now seems to think that okay, but, we have a recession. Well, sure, we've known that we're in a recession for about 6 months. If you go on Twitter and all the people that follow stocks, yeah, we've been telling you we've been in a recession, and by the time we'll be out of this recession really really quickly too. By the time the classic world says, oh, the recession's over, we will have been done by the recession by probably another 6 months. So there is a huge lag. Uh, so these results, in my humble opinion, are during the recession, during the tough times. And these companies, these five companies, have been growing really fast despite tough times. So the first company I want to talk about really briefly is Hims and Hers Health. Most of the business is still Hims. And they do things like drugs for ED, for hair loss, for depression. They do a bunch of tough stuff. And for women, they also deal with hair loss, depression, and they're introducing other things like birth control, which I think could be huge. And this company has had an absolutely wonderful quarter during the bad economic times that we're in. Growth quarter over quarter compared to a year ago was 95.95%, and it's an increase from 87%. So not only is the recession not hurting him or her, but the recession is actually, not even a factor. They're growing faster despite the recession. And believe it or not, if you were to see the stock, you would never guess. You would never guess that this company is doing so well. This is an example of a company that has been thrown out with a bathwater just because it's a small cap, and people don't analyze that company. It's a very innovative company. They've been growing so fast. Gross margins have also been trending up. So, anyways, I'm buying this company, not investment advice, but I'm buying this company. They're growing so fast. They have a great, compelling product. They have a product which I think could see increased sales during a recession. Very, very much riding waves, multiple waves of disruption, from the use of a mobile app to do prescriptions, to telehealth and telehealthcare. They are riding a pretty strong wave, and I really like HIMS as a stock. All right, stock number two that has been growing so fast, and this is actually the only stock in my list of five stock that is not down 50 to 70%. This is the only stock that's actually doing pretty well. Yeah, that's the only stock that's doing pretty well this year. But that's okay. It doesn't. I mean, it's okay for a stock to be doing pretty good. Because look at this. Look at this madness. This stock has been growing, has been increasing its revenue despite the recession. I mean, we moved from 62% quarter over quarter growth to 80%, and 3 quarters ago we were at 46%. The stock is growing faster and faster and faster. This Enphase is a microinverter stock. They are the chips behind solar panels. Microinverters have a lot of advantages for a bunch of different reasons. which make it so that they are winning the marketplace. They are the leading microinverter for solar panels, and microinverters are very small. They're much more profitable, much higher margin product than just selling solar panels. It's a much better way to ride the wave of solar energy by selling microinverters, uh, for which you need one per panel, than it is to say solar panels, where you're going to have tremendous Chinese competition. This company is really emerging as the leader in the space, and they seem to be doing a whole home approach with the battery, with a power management system. They're doing essentially what Tesla has wanted to do for a decade, but Tesla has never had the focus that it needs to do that, right? All of the batteries of Tesla, all of the focus, strategic focus of Tesla is towards the car. So they haven't had the focus to do that. It seems like Enphase, to me, is executing on Tesla's vision. And they're executing so well on this vision. And so the vision is that most homes, with the efficiency of solar panels these days, solar panels are very, very efficient. Most homes can be independent in the power that they get, thanks to solar. That is a revolution. That is the revolution of solar. I realize that right now technological revolutions are not very hot in the market, but it is nonetheless the case. Solar panels are decreasing, and I would argue that a lot of the big plus of Enphase is their installer network, because there's like most of the backlash that you get about solar panels is about scams, right? Installers who are essentially scammers, who put you a terrible, terrible system. Enphase has highly vetted installers, and they tend to be really, really good installers. And you deal with Enphase. They have like Enphase contracting, Enphase permitting. It's a really well integrated business. And I'll put a link in the video. I have a full video on Enphase, but Enphase growth accelerating despite the crazy economic times, tough times that we're in right now, and that they've been in this quarter, accelerating. One last thing I'll say about Enphase, they're also accelerating in Europe, like even faster than the US, which is pretty darn crazy, because Europe is in the depth of a recession as well. So, anyways, moving on to another stock where you wouldn't know that they're doing so well if you look at the stock price. I mean, if you look at the stock price, it looks like it's headed for bankruptcy. Sofi Technologies. So Sofi has been battered and battered and battered by the market, because the market still thinks that Sofi is mostly a student loan company, a student loan refinancing company, and they don't bother to do the research. And so because they think it's just mostly student loans, and of course, student loan repayments are not coming back. I don't think they're coming back. I think that's going to be just like DACA. But every 6 months, every 3 months, right now, we get news about moratorium extension. We get news about another lawsuit, and every time the stock gets battered, because the classic Wall Street media doesn't do the deep research. But if you follow SoFi stock, and if you're like me, you probably know student loans are not coming back. And the CEO is not foolish. If you listen to the CEO is, the tone on the call is very clear that they don't count on student loans. But guess what? They've pivoted. They've pivoted. The student loan moratorium was put in place in early 2020. And look at the growth that they had since then. I mean, it's been absolutely insane growth. Absolutely. If you look, 53%, 50%, 58%. So Q3 was 58% revenue growth compared to 50%. So this company has one of the cleanest revenue growth ever. They keep adding customers, keep adding products, keep pivoting, direct deposit. They bought a bank. Everything that should have gone right for SoFi has gone right. But student loans, because they associate student loans with SoFi, the market associates, money managers associate student loans with SoFi, they haven't been willing to give credit to this company. And by the way, the CEO is a rock star. The CEO of SoFi is absolutely amazing. Uh, I suggest that one listens to the conference calls of SoFi and make your own opinion. And there's some bear arguments against SoFi too. I'm not going to deny that. One of them is it's a pretty complicated company to analyze. So that's one of the arguments against it. And there's competition in fintech, but nonetheless. And I believe in numbers. I believe in growth much more than what the CEO tells me about the company being good. And when I look at those numbers, and when I look at a triple beat, they had a triple beat last quarter. When I look at those numbers, I see a costly signal, right? You can't fake numbers. You can't fake revenue. Revenue can't be faked. So this is a costly signal that the business is resonating with customer thanks to this revenue growth. All right, let me move on to another business, which once again you wouldn't know is doing so well. The business is MercadoLibre. So MercadoLibre is the big e-commerce platform for Latin America. No, it's not Amazon down there. Amazon's not doing really well in Latin America. C Limited is not doing as well. There's some competition here and there, but the leader in Latin America is MercadoLibre. They are essentially the Amazon of Latin America. And the growth is doing so well. By the way, this is an error from macro trends. These numbers actually look very, very sleek, but they've had an error in how they computed that. I don't know how they did that, but that's not the point. The point is, if you look at this. Revenue growth is, and that's why I included it, it's increasing. He went from 52.5 to 52.56. Okay, it's flat, but it's still increasing. Like it's still very impressive that this company has 50% revenue growth despite a major recession. Despite a recession, this company keeps growing, right? They have a very, very compelling platform that people love in Latin America, and I've made a full video about Mercado Libre, and you may want to look at it. It's a very interesting company, and showing no signs of a slowdown despite the recession. So again, if you looked at the stock, you don't understand. When you look at the stock, you absolutely don't understand. And then the last one, which is totally going against trend right now, is Tesla. So everybody is telling us that Tesla revenue growth is down. Everybody, look at the main media. You look at CNBC. It's all about, oh, demand is weak. Oh, China demand is weak. Oh, look, it's terrible, terrible, terrible demand. And they have this tendency also of focusing on the price of the car, like the sell price of the car, and not the total revenue. What matters is the total revenue, not what you're charging in China. Most of the reason for some of the decreases in price that Tesla has had to make has to do with the fact that a lot of the incentives, government incentives, kick in on January 1st, 2023. And so, of course, buyers are not going to be buying Teslas. They all want to wait. They don't want to delay until January 2023. That's most of the reason. Nonetheless, when you look at the data of Tesla, a stock that is down more than 50% from its high, is still growing tremendously. And let me show you here how they're growing. So their growth was 55.6% last quarter, which was a tough quarter. I remember throughout the quarter, throughout Q3, people telling us, who has money to buy a $50,000 car in this recession? Nobody has money to buy a $50,000 car. Well, that's not true. Look, revenue increase. And by the way, in June, the revenues were down because of China, because China, the China manufacturing was shut down. That's why the revenues were down. So that's one of the big arguments of Tesla investors is that, yes, every vehicle that is manufactured is sold, and they're going to be sold. And perhaps you have idiosyncrasies in different markets regarding the price and regarding when incentives kick in, but these vehicles will be sold because Tesla, no matter what you do, they cost 7 to 10 times less to operate. If you buy a Tesla, you save money. It costs $7 to have a full tank of gas in your Tesla. So it's like there's no way around it. It's like when you have a regular tank for your car that's like 40 or 50 bucks, and you're moving for 40 or 50 bucks to 7. This is a 10x move. You're not, you can't go against that. I mean, a lot of Tesla bears try to say, "Oh, Tesla is about the environment." I dare anybody to find a video where I talk about Tesla where I say, "Oh, Tesla is selling because it's for the planet." Like it's no, Tesla is a better technology. I mean, sure, it does things for the environment, but that is I would argue one of their weakest selling points. Like they have huge selling points beyond the environment, beyond the environment. It's a cheaper car. It's a better car. It's a better product. It's faster than most gas cars you can get. They last 300 to 500,000 miles. They retain their value when you resell. They're computer on wheels. They cost almost nothing to operate. They cost less to insure. They are the main brand of Gen Z and millennials, which means that when you resell it, you're going to have no problem reselling it. They have so much going for them. They really, really have a lot going for them. Very little maintenance, no moving parts. I mean, I could go and I have a whole series on Tesla and on why Tesla is. And keep in mind that Tesla has such huge catalysts in 2023. It's really crazy how low this stock is and trading. And it is part of my list. It is part of my list of the 5 companies that not only grow at 50%, but whose growth has accelerated during the terrible, tough macro Q3 that we've had with the whole Fed bluff madness. And this concludes my video. Thank you so much for watching. None of this has been investment advice. Never ever investment advice. Just entertainment. Thank you for watching, and I will see you in my next video, and enjoy your holidays if you're taking some time off. Thank you.